Good morning to you in the States. Good afternoon to you in Europe. Hope you are doing well. Thank you very much for joining us live on YouTube and in the room as well. Good to have your company. I hope you are well rested for the upcoming session. Shane, it's been a relatively quiet European session, to be honest, all things considered. Just your average 109 pips top to bottom on the euro today. Not a great deal going on, although having said that, 100 pips is not really bad in anybody's pocket any day of the week. But it looks like certainly the US is going to be providing most of the volatility today. We've had the ADP employment figures. They have come in slightly hotter than expected. That has provided us with a hawkish reaction in the markets thus far. But I suppose the only big draw really for this afternoon, Shane, is the ISM numbers.
Yeah, the ISM is coming out, and a lot of folks are going to be looking at that. Remember, we're talking economic contraction globally, so anything that suggests that we're on our back foot here in the United States, clearly the entire world's going to be like, okay, well, here comes that big recession that we've just been schooled over the last 72 hours is coming. And so I'm looking at the non-manufacturing PMI. We're due to come in at 56, just beneath 59. I'll be watching that number very closely because anything that plays into that global recession narrative is definitely going to drive some participation. To me, it looks like a pullback day just looking at equities futures. I'm not really bearish on stocks right now after the last 2 days, the tremendous run up. But I mean, our news cycle, like you said, not much happens during the overnight. It's 100 pip range in the euro.
Yeah.
We've got North Korea's getting active with missile launches. We've got OPEC. We'll talk about them in a bit. And the RMBZ going with their 5th consecutive half-point rate bump. So for me, there's a tremendous amount going on. This morning is more than likely going to be active one way or the other, but like you said, not much happened. 100 pip range, and we're all complaining.
Yeah, I know, it's very strange, and that's obviously off the back of everything that's been going on the last 2 weeks. But what do you do? I mean, I was actually quite glad to see the print of the ADP numbers, because it just gives validity to an understanding and perspective behind the move that we've currently got in equities. Now, if we just look at the S&P in a little bit more detail itself, let me just bring the chart up. Now you can see that we have had what we would describe as a classic hawkish reaction. Why is that a hawkish reaction? Because if the ADP comes in slightly hotter than expected, which it has done at 208, it means that the impact of the front loading and the hiking that we've had from the Federal Reserve on the jobs market, it's not showing itself. Now, Shane, there's a tendency for people to then use this as a barometer to go into Friday, isn't it? And that is not always the best thing from a trading point of thing to do. It's not like this is just the precursor to NFP. They can be very, very different readings, can't they?
Yeah, that's one of the biggest things I would stress to new traders or traders just now getting involved with fundamentals is one number is not another number. We have to understand that each one of these think tanks comes up with a different set of metrics to really measure what they believe is that gives the best representation of something like jobs. And it's really the same phenomenon we see every single week with your API and your EIA crude oil stocks. You'll see the API number come in at one value and the EIA will be completely the opposite. Remember, I mean, these are not all birds of a feather. These are very different groups that come up with their metrics, and to think that today's robust ADP number is going to suggest that we're going to get a great NFP number on Friday, I'm not buying that for a second, Nick. I've been down this road too many times. We're good, but the NFP for me, we're going to unpack that in great detail in the next 48 hours. But to me, it has nothing to do with this ADP number.
Yeah, very much so. Yeah, we will cover all of the NFP stuff in a great deal of detail. Our coverage of it will pretty much start in the next 24 hours, really, because it is the build-up for the week and for the beginning of the quarter as well. It's a very, very important metric to look at. Now, one thing I just want to reference quickly on the S&P before we move on, because we need to look at crude as well before the open as well. Just looking at the S&P itself, I just noticed that the 19th of September. Let me just bring that up on the daily. I just want to reference that with CME open interest. It's a real big barometer for me. But what I really like this area here, this downtrend that we've had on the S&P 500 from around about the 19th onwards. There's new money coming in there. That's the bears putting fuel into this down move. Now, for me, where we've got this 38.27 area, from there above to the top of the of the daily candle from the 19th. That's an area that I really want to pay a lot of attention to, simply because if we get a rally up into that area between now and Friday, or maybe into Friday itself, what it could potentially do, if we have a lot of high volume behind it, that could show a lot of the short sellers actually being squeezed out of the market. If that happens, then there's a lot less fuel in the S&P to drag us further down from here, and it could mean that the bottom is in there. Personally, I can't see it. I think we've literally just experienced a pullback in a bear market. The statistic that I read, I've forgotten exactly what it was. It was something like the last 2 days have been the best upward trend over the last couple of years or something in the S&P. But never forget that we always get sizable bull market moves within the context of a bear market. That is a very, very common metric within most US indices.
Yeah, absolutely. Everything's relative. As I'm looking across the equities futures today, this looks to me like a pullback day off of two fantastic bullish days. I got my weekly chart up for your US 500. You're looking at about, we're up over 4.25% on the week, but we really stalled out at some key resistance levels, 38% on the weekly, about 37.83. I'm targeting really 38.55 to the top side. That's that 50%. If we do get established above that level, right around 38.50, I'll consider maybe a bottom being in,
Yeah,
but I'm not
yeah,
ready to start ringing the rally
yeah,
bells like Jim
yeah.
Cramer was yesterday.
That's
I'm,
right.
I'm, I'm
Yeah,
taking a look. I mean, the 30-year, the bottom line is this: the 30-year mortgage rate, the MBA comes in, it's 6.75. It's up another 0.25% over last week. This is an explosive lending environment.
yeah.
The monetary policy is having a major impact in real estate. And for me, until those mortgage rates start to come down, it's hard for me to see a broad-based rally in the S&Ps and really start talking about a recovery for 2022.
Yeah, absolutely. Yeah, I mean, there's no question for me that there's still more downside in the market. One thing we should just reference before we get on to the actual opening balance, we should have a quick look at crude oil, because that's where we're going to see another seismic amount of, well, potentially seismic volatility in the US session today. And now we have got the Cushing numbers, the EIA numbers out today, and it's going to be an interesting one. Certainly during just to catch everybody up in the US, up on the developments during the European session, we have had some talk out that OPEC are going to be basically, they're putting out the signals of sizable cuts. So we've got a very classical supply and demand narrative feeding crude oil at the moment. There's been a change in commitment of traders. I was bearish on crude, and I know yourself, Shane, we were looking for a rotation back lower to 75,
Yeah.
but I'm really going to question whether we're actually going to get that from here today. What do you think?
Yeah, that's one of the great things about being an active trader is you can change your mind.
Yeah.
And when we see a news event like this OPEC plus, we've got the Saudi Arabia, we got Russia at the table, and we're talking about our biggest, really our biggest production cuts since the beginning of the COVID-19 pandemic. I mean, this is a head scratcher for me. This looks completely like certain folks trying to really drive prices not just higher for this year, but going into 2023. What happens when you do get some dovish Fed policy eventually,
Yeah.
and coupled on top of these output cuts? I mean, crude oil is still exceedingly bullish at this point, and it's a bearish time of year. And look, we're printing 80, 87 and a quarter.
Yeah.
To me, these fundamentals often trump price action. That's why I take a hybrid approach, Nick. I always have my ear to the street, and when we hear something like this type of output cut, holy cow, what a bullish market driver.
I mean, do you think that it's definitely, how do you think that sits now with the 75? Because we were both really convinced of that. Do you think that's just literally off the cards now, or do you think we're going to rotate up to, say, for example, oh, I don't know, sort of we're going to go up to the 90 level there before a retrace back down? How do you see that? How do we factor in a 75 print on crude oil from here?
Yeah, I have key resistance up here at 88.
Yeah,
I'm watching the political situation in the United States completely. When you see a market driver of this nature, I expect a reaction out of the White House. Supposedly, they have a full court press on this situation, trying to make sure that these output cuts don't happen. I'm looking for deals out of Iran to come out of the woodwork.
yeah,
I'm
yeah.
looking for anything that the U.S. government can do to put more supply on the market. That may potentially take us back down and wash out what our current swing low is, right around 76.40, 76.50, somewhere in there. I still think we can hit 75, but we're going to need some fundamentals are going to have to come into play, because right now, I mean, the bidders are in complete control. We're up almost 10% on the week, 9.5%. So I don't think 75 is out of play, to answer your question, but we're going to have to see a fundamental market driver come into play.
Yeah, well, obviously it's going to be interesting to watch those EIA numbers will be out within an hour from now, because the market is just about to open. We are looking at a 5-minute chart of the, sorry, apologies. We are looking at a 15-minute chart, intraday chart of the S&P 500. Now, we will see how this pans out for the session. And obviously, of course, we have the ISM numbers still to come. So there is going to be some decent volatility, I suspect, certainly potentially more to keep people active during the US session today than has been in Europe. So let's just have a quick monitor now exactly what is how the S&P is going to open. Well, a bit of a quiet start. We'll just look at it on a 5-minute chart.
Yeah, off about 1% there. Little bit of a buyback going on in the Dow. Choppy open. It looks to me like a textbook pullback day. It's very early, of course, but this looks like a pullback on the previous two. 30-minute chart exceedingly bearish here for the US 500. And now we're running at those session lows. We'll see what happens.
Yeah, it's going to be interesting to watch. The last thing that I want to go over quickly, I just want to reference the dollar index. Now, we teed this up in a couple of times this week in the stream. Obviously, how vastly important the US dollar is in the price of everything, and I know that OPEC themselves have blamed the part of the current situation in crude oil on the price of the US dollar. Just look at that dollar index. I've got it here on a 1-hour chart. We have rotated very nicely. There was a tendency to look at those tops, those 114 tops and that kind of thing. We have had what would be quite an exponential move up there over the last few weeks, up to 114, and that rotation back down. People can fall into the trap thinking that's it, it's over. But in actual fact, if you look at it on a daily chart, on a 1-hour chart, something like that, all we've really done is anything that's parabolic within that move up from 111 up to 114 is just rotated back down, and we've found support quite nicely today. So I'm just hoping that between now and then, I personally am still bullish on the dollar itself. I think there's more upside in it, which is obviously a hawkish sign, a risk on play, a positive carry trade. That dynamic has not changed, particularly against the Japanese yen. So for me, the dollar is looking to me like it has found support and potentially upside from here.
Yeah, I tend to agree with you. I think we may have just seen a little bit of a bump in the road over the last 2 days, beginning of Q4. Only time will tell. If the Fed does back off of this real hawkish stance, then anything can happen here. But when you pull a daily chart of this dollar index, I mean, we just bounced right off of 110, and we're searching big round number to big round number. For me, right now, you're up about 1% on the day. This is a pretty darn strong recovery in the DXY. So I'm still bullish. I agree with you, Nick.
Yeah, still a lot of. I mean, if you look at that. I mean, that is, if you look at that on a scrunched out daily chart, that's a parabolic move. I think there's potentially more support in here. I don't think it's over. It's certainly not over from a commitment traders point of view. Everything that I've seen, I've not seen anything that looks that's going to hopefully tie into a dovish play. NFP will feed into that as a driver as well if we're going to get that, and we would see the dollar react accordingly. As yet, it's all there, and it's like they say, until you break the level, until you break that support, it ain't over.
Yeah, just a big time week in NFP, and then we're going to come with CPI and PPI in the following week. I mean, we're gonna know a lot. We're going to be sitting around probably in the next 10 days to say, okay, we got a pretty good idea of where we're going for the near future for the dollar. So still bullish as of yet. It's got to prove itself. Still bullish here.
Very much so. So that's pretty much like a little scan of the markets as they currently lie. Not the busiest day, but certainly not the most quiet. And obviously keep that risk in check if you're gonna approach any of the equity markets today or any of the other currency or commodity markets. There are those on your screen for you. There are those those Energy Information Administration, to give it its full title. Those crude oil inventory numbers out of Cushing, Oklahoma today. Consensus 2.052 million. Just to tie that in now with all the other stuff, thank you very much for joining us on YouTube. If you haven't seen the kind of stuff that we do, let me just bring that up. Oh, apologies, I'm going the wrong way on my slides. You can see here we have our new prop firm is now up and running. That is proving very popular. We've got a couple of guys already funded on that already, haven't we, Shane?
Yeah, fantastic. Actually, the performance thus far has been relatively solid. So we're excited about the funded trader program. If you're interested in getting involved in sort of a more professional capacity and you don't quite have the capital that you need, this is one way to get it. That's for sure. You can start at 50,000, level up to 2.5 million. Nick, you know as well as I do, the name of this game is money and purchasing power. And if you have access to it, I would consider taking advantage of it. So we're real excited about that funded trader program, watching our funded traders closely, and more importantly, certainly their development. So it's an exciting time to be here.
Yeah, it really is. Yeah, it is proving popular. We've got a couple of guys funded already. There's more in the pipeline. I'm absolutely sure about that. Also, don't forget as well, if you are new to what we do, we have got the first phase of our new academy content, our new sort of like educational background, which is going to underpin our prop firm as well. That has now been released. We had some very nice feedback on that. It's very much focused around psychology and strategy. Those are going to be the two core pieces of the academy. They're going to build over time, and then we're going to put all the economics around it over the next 12 months. So if you are interested in looking at a bit of a game changer in retail trading education, this is where you want to be. Join in with a website, sign up for a free trial, and have a good look around yourself. I think you will enjoy it. And finally, lastly, just to mention as well, if you we've been promoting it, it's been incredibly popular, and I can't wait for the last part of Mantis. One of our advanced traders from the room, he is coming on Friday to give us a heads up on how to trade his Mantis reversal claw, and that has been popular, Shane.
Absolutely, it's fascinating. Watch a market professional operate from the other end of the world. I'm baffled that folks are everywhere. They're down under. They're in Britain. They're in Montana. They're in Salt Lake City. But his Mantis's approach to the markets has really been entertaining for me. I've enjoyed it. Really, some deep thinking going on there and what it is to be a long-term professional in the financial environment. So it's fantastic. Can't wait for part 3, Nick.
Yep, it's going to be very, very good indeed. That will be Friday live in the UK session. We will post the times in the room. If you are on YouTube and you are interested in having a look at the different strategies and that kind of stuff, please do sign up, join in, have a look, and see what you make of it. There's going to be PDF giveaways as part of that as well, with all breakdown of the full strategy and an AMA with Mantis himself. So if you have any questions, please line them up and he will be happy to answer them. Right, that is it for today. Thank you very much for your company. Enjoy the session that is ahead, and we will catch you all tomorrow.